On the 10th of April, which was Wednesday last week, I dropped a video that you can actually take one trade, one single trade, or at most two, and make more than 500 pips. And after some time, those two trades, New Zealand dollar CHF and New Zealand dollar JPY, they have retraced to a solid man zone where you can enter the trade. So today, I want to give you perfect entries where you can enter these trades and catch more than 500 pips. And these are swing trades. You are going to keep this trade for a long period of time. So if you miss the first entry, what you will just do is to wait for the trade to go to another high and then come back to a low using the Fibonacci retracement, and you can rejoin the trade and be sure that you catch enough in this week. All right, so without wasting time, let's go to the chart and follow up the analysis. Based on the fundamentals, I'm looking for a buy position on the New Zealand dollar against Japanese yen. Let's zoom in this chart like this and observe the entire chart. What you will see here is that we have a high here and we have another high here. Those are two places where we have a high that are closest to the current position of the market, which is around here. Those are 3 points of interest. So once you have zoomed out like this, you know where your target should be. So let's now zoom out the chart and do more observation. This is the weekly time frame. What this showed us is that the chart has been in an uptrend by giving us high, low, higher highs and higher lows, as you can see. So if you take a trend line from this point and draw it up, the market is clearly following this pattern. So the last impulse move that it did from this point, it went and created a new high and came back to touch the trend line, continue the next impulse move. So if I take Fibonacci retracement tool and measure from here to that level, what you will see is that this market has retraced to the 50% pip level, which is one of the good continuation levels, all right, on the weekly time frame. So this is very good for us to have some levels of confidence that the up movement is going to continue. We are done with our analysis on the weekly. So if you come down to daily time frame, we are just seeing clearer what we observed on the weekly time frame. Now from here, market went, gave us a high and came back to that 50% level and has started the next push. But should we take the trade here and keep stop loss down there? The stop loss is going to be too far, and that is not going to be too good for our risk management. So if you bring this point here, because this was the last movement that made that push that created the new high, broke this level and created that high. So we can take the Fibonacci from here down to that point. So if you measure it like that, you will see that the market retraced to almost a 78 point something fib level, and this would have been a good place to take the trade, but it is not yet late. But if you come to the 4 hours, you can give yourself more room. On the 4-hour time frame, you can still move the stop loss a little bit higher. So this level will be the first take profit will give us a risk reward ratio of 2.7, while the second take profit will give us a risk reward ratio of 6. So I think that is how you should manage this trade, and make sure that as you are trading, you are not taking more than 2% of your account on any trades based on this. So let me show you what you will do. So if you double tap on this, assuming that your account size is $500 and you are going to enter this trade, the market says, the calculation says that you should use 0.015 lot size, which is approximately 2. You can use 0.02 on this trade. Do not go and over leverage your account. This is swing trading. So I do not over trade. I cannot go here and put a large lot size if the account size is just 500. If your account is 1,000, what you should be trading with is a 0.03 lot size. Your account is 500. The highest you should take is 0.02 on this trade. Okay, so that is that. For New Zealand dollar CHF, actually there are two major trend lines that are important to us on the weekly time frame. This is one trend line that showed the downtrend. The second trend line is this one. You can see here that the market has been touching this trend line. It touched there, touched previously touched there, came back to touch, and the market touched here, and before that final movement. So I am anticipating, based on the fundamentals, that this trade has the potential to come back here and then to touch the trend line, that major trend line. So also on the downside, it also has the potential to push from here down to somewhere around there. It's possible. So those are the two major possibilities on New Zealand dollar CHF. But what I see this week and how I have chosen to take this trade, if you go to the daily time frame, this is what you will see on the daily time frame. Using the Fibonacci retracement from this point to the high, we see is that what you will see is that the market did a correction to the 50% level. Now there is still a possibility that the market can still push a little bit down from this point. It actually came to the 50%. It can still push to the 60% or even to the 78.6% level. So if you are entering this trade, any area, any place within this zone, you must get a stop loss and risk calculation that accommodate that possibility. Okay, so this is the daily time frame. If you come to the 4-hour time frame, do we see a better opportunity? This is the level we saw at the daily time frame. But on the 4-hour time frame, if you want to move this thing to this level, what we saw last week was this. I was anticipating that after the market did this, what we saw last week was this last one. The market did that, the boss move, and then corrected back to this zone, to this demand zone. So you can see that from this demand zone, there is an opportunity for us to take the trade. If you are going to take the trade from this demand zone, it's also fair that you can do this. You can take a long position, maybe keep a buy stop somewhere there, and then this should be your first take profit. And after this high, your second trade, you will now be using trailing stop to catch a risk reward ratio of 13 and be willing to keep the trade for up to 3 weeks to 1 month. All right, thank you for your time.
And welcome back. Now that you've watched this video, what I want you to do simply is to click the subscribe button and be part of the community. Tomorrow, I will be dropping another video on fundamentals. If you want to be a successful swing trader, what you need to do is not just to depend on technical analysis. 80% of your effort has to be fundamental analysis. Then you will now use the technical analysis to know when to buy or when to sell. So I want you to subscribe to the channel and be part of the community, and you will be grateful that you've done it. And I want you to be part of the community. God bless you. All right.